Welcome, welcome, welcome. I'm your host, Henri Arslanian, and welcome to this episode of the Future of Money podcast. My goal with this podcast is very simple. It's to go deep in some of the biggest ideas, trends, and developments we're seeing in the field of crypto, and hopefully empower you with this information, and then let you make your own decision on what their impact could be on the future of finance and the future of money. To do this, I invite each week one of the leading figures of the global crypto community to have a one-on-one conversation amongst crypto aficionados and discuss some of these topics. If you like the show, please make sure to subscribe so that you are notified when a new episode comes out. And if you want to support the show, please give us a little 5-star rating. It really helps us to subscribe. Of course, it really helps others discover the show as well. Before I introduce my guest today, I just want to say a big thank you to you all. As many of you know, I recently released my latest book called The Book of Crypto. And thank you for making the book really on the first weekend of its release, the #1 release globally on financial services in Amazon, and also already a top 10 global bestseller in financial services. So really a big thank you, not only to you all, but also to my publisher, Palgrave Macmillan, and to everybody who helped me on the book as well. It's in over 400 pages. I cover pretty much all the basics of crypto that anybody that wants to learn about the industry, anybody looking at getting a job in the industry, or somebody who's joining our great community needs to know. So it's really more than 2 years of hard work. So big thank you for all the support on that perspective. Now to the show today. I'm very excited. My guest today is Joseph Ziolkowski, the CEO and co-founder of Relm Insurance. We're going to talk about the world of crypto insurance. What are the challenges? What is a prospect? What are the big challenges that we're seeing? And what is the future of crypto insurance? And I'm very excited to have Joe with us today. By the way, one thing about him that you may not know is that he loves to cook. And he's a surfer, and he's surfed really across the Western Hemisphere. So you see, it's not like people in insurance are also very cool. Joe, great to have you with us today on the Future of Money podcast.
Henry, great to be here. Thanks for having me. Love the intro.
And so, actually, really for the benefit of our audience, we were supposed to do this actually at the Crypto Bahamas, where there was a stage called the Trusting Disruption stage by Deltec. But I really wanted to actually have a one-on-one recording as well, because I really wanted the audience to benefit from really and understand some of the big developments that we are seeing right now in the field of crypto insurance. So I think I'm very happy to have you on board. And maybe for full disclosure to the audience, Deltec, which is one of the investors and shareholders in Relm Insurance, has been a supporter of some of my educational content in the past, and I actually now personally sit on the board of Deltec as well as an independent director. So again, I just want to make that full disclosure before we kick in. Joe, before we really jump into the exciting topic of crypto insurance, can you share more about your background, your personal journey, how you ended up, and also tell us what is Relm and what does it do?
Sure. Yeah. And I love the energy when anybody can come at it with some insurance energy. It's a beautiful thing. So personally, I've been involved in the insurance industry for over a decade. I've, operated on both the traditional and the alternative side. On the traditional side, I actually had launched an admitted carrier in Maryland back in 2016. I set up our reinsurance subsidiary in Washington, D.C., and we were issuing a very niche form of contract surety for government contractors. I set up a life insurance company with a capital partner in the Bahamas back in 2015 as well. But the majority of my time in insurance, and actually some of the most interesting and stimulating times that I've had in the insurance industry, I've spent on the alternative side, utilizing alternative strategies and insurance infrastructure to achieve outcomes for insureds that are just not generally achievable in the traditional insurance marketplace, utilizing things like captive insurance and reinsurance strategies to treat risks that are either not adequately accommodated in the traditional insurance marketplace, or where you have a situation where you as an operator of a business are actually doing a better job managing your risk than peers in the industry. And so instead of subjecting yourself to kind of the traditional distribution norms of the market, you seek alternative strategies. And I've executed on nearly 150 of those for companies all over the world.
That's amazing. And can you tell us more about Relm? What is Relm? What does Relm do for the benefit of our audience?
Sure. So Relm is a fully authorized general insurance company domiciled in Bermuda. And we launched Relm in 2019 after working with the Bermuda Monetary Authority for nearly 12 months to get them comfortable with a plan of operations that was geared in a very focused sense toward providing informed and dedicated capacity to companies operating in emerging sectors. And for us, back in 2019, we launched with a focus on providing capacity to companies operating in the crypto and blockchain space, cannabis, and alternative therapeutics, including a number of early stage psychedelic initiatives.
So can you be for the benefit of audience, I think one of the realities people don't understand really is it is extremely difficult, or definitely was, and now it's becoming less maybe difficult for crypto companies to get insurance. Can you maybe explain for our audience, why is it so difficult for crypto companies to get insurance?
Yeah, it's a great question, and one that we've spent the last 3+ years answering, right? And I think there are some pretty clear reasons why getting insurance in the crypto space is difficult. Number one, we have to keep in mind that insurance has operated largely the same way for the last 350 years, right? It is a function of looking to the past in order to inform the future, right? And insurance, what that means is analyzing a statistically significant data set of historical loss exposures, preferably a decade's worth of loss exposures. And after running all of that data through simulations, it puts insurance companies in a position to confidently project future losses, right? And if I can project the frequency and severity of loss events in the future, I can arrive at a pretty solid conclusion today about the rate that I need to charge, or the premium that I need to charge for coverage, and the amount of reserve that I need to hold on my balance sheet in order to ensure that my insurance company is in a position to pay claims when they arise in the future. And it's worked extremely well, right? That method. I mean, insurance, the insurance industry is now comprised of trillions of dollars of capital. Some of the most successful companies in the world have operated in this space. It just so happens, though, that generally speaking, as an insurance company, if you don't have the ability to analyze data in that sense, right, historical loss exposure, so that you can get comfortable with what's going to happen in the future, insurance companies typically just will not provide any capacity, right? If you can't stand up from an actuarial standpoint and report to the board that we are definitively charging an adequate rate and we are holding reserves in an amount that is deemed to be adequate going forward, most insurance companies can't write it. So that's number one. Number two is the fact that, especially as it relates to crypto and blockchain, right, we're talking about new technology. We're talking about technology that you and I both agree is in the process of changing the way that we trade on a global basis. But new technology in the insurance industry is a very hard thing for insurance capacity to get its arms around, right? Insurance capacity moves very slowly and almost always slower than the pace of innovation on the entrepreneurial side of things. And then the third thing is the headlines, right? Every other week, it seems, there's some sort of significant hack or exploited deficiency in a DeFi protocol, or some sort of rug pull or nefarious event. And while you and I both know that those events represent a very small portion of all the amazing stuff that's actually taken place in the crypto economy, those headlines are what stick. And so, when you look at publicly traded companies in the insurance space, they have things like reputational committees and ethics committees and reinsurance committees, right? All of these things that provide very sound infrastructure from an operational standpoint, but actually impede that capital from efficiently moving into the space in a way where it's supporting the legitimate opportunities and, clearly avoiding some of the things in the space that nobody wants to provide insurance for. So I'd say it's those three primary things that have made it so challenging for companies to get coverage from an insurance standpoint.
But I would argue these are obviously kind of a chicken and egg issue, right? Because like you mentioned, the headline, the speed and the risk, right? The lack of data. If we go with these premises, pretty much any new technological advancement that comes up, getting insurance for it will be almost de facto impossible. So how did you guys manage to go through this? Like, how did you manage on these? I mean, the headline risk, I think it's a risk for most companies, right? The speed of change. I agree with you. The speed of the insurance industry, it's sometimes comical, right? How slow it moves, and the lack of data is obviously one that is there. How are you guys were able to get comfortable with some of the risks that are involved in digital assets and be able to insure the sector?
So, I mean, we certainly engage independent actuaries to work with us, on a root cause analysis of all of the known crypto loss events that had taken place since 2009. So there was a component that was rooted in, kind of traditional loss forecasting from a frequency and severity standpoint. But, we could all agree that that data isn't something that you could just, make conclusions on blindly, right? And so we took this dynamic approach to underwriting with a heavy basis toward account-based underwriting, which is to say, if you're operating in the crypto space and you want to obtain insurance, then ultimately we're going to want to know who you and your management team are. We're going to want to know who your investors are. We're going to want to know what you've been doing, what you're currently doing, and what you're going to be doing, so that we can get a perspective on things like execution risk, compliance infrastructure, right? A wholesale underwriting, so that while you may be operating as, let's say, an exchange, we're not going to assume every exchange operates the exact same way that you operate, right? You may be an above average operator. And if that's the case, after our diligent underwriting review, then we want to support your business. We want to provide you coverage. But the next exchange that comes in the door, we're going to go through the exact same fact-finding mission and merits-based underwriting approach in order to arrive at a conclusion, an informed conclusion that we can provide capacity to your business. And so whether you're operating as a self-mining operation or whether you're operating as a asset manager launching a crypto native fund or a crypto venture or equity initiative, or whether you're a payment and remittance platform, or whether you're a developer of a DeFi protocol, our whole approach has been to understand the fundamentals of your business and really understand what you have planned for the next 12 to 24 months, so that we can get our arms around the types of exposures that could potentially arise depending on the coverage that we are underwriting on behalf of your business.
And just Joe, this makes a lot of sense. I think when what you're saying actually makes common sense from a business perspective, and I would expect that most insurance companies would take this approach. Why do you think this has not been the case with other insurance companies? Is it because, many would say the insurance company is still a very profitable industry and there's no need to shake the boat, or because, a lot of people in insurance companies have been there for literally decades. There's not an industry with a lot of, let's say, turnover from a staff perspective. What do you think are the reasons that none of the other big players went through the process you just described right now?
Well, so two things, and actually you hit on both of them. Number one, the majority of these insurance companies with the significant balance sheets and the operating track record and some of the other kind of hallmarks that you'd expect from any large insurance companies, they're already underwriting and generating so much premium and likely profit, underwriting traditional lines of coverage for companies operating in traditional spaces, right? The brain damage, right, that they would have to undertake to get comfortable with the technology, understand the subsectors across the crypto ecosystem, take the time out of their day to hop on video conferences and go into this in-depth account-based underwriting approach actually is counter to the way that insurance underwriting generally works, right? In insurance, you underwrite by class. You find financial institutions operating within a region of the world that have up to or less than a certain number of, a certain amount of annual revenue, with up to or below a certain number of employees, operating within this sector or that sector. And if they check those boxes, you provide coverage. And our whole approach is it's a much more manual and kind of labor-intensive account-based approach, if that makes sense.
Very interesting, huh? I mean, I would expect that actually. I'm surprised shareholders, a lot of these firms, these big insurance companies, are not pushing them, to kind of future-proof themselves or actually play a role in this space. So very, very interesting on that perspective. Just one question on the type of coverage that you guys are providing. When you look at the crypto space, first of all, what are the risks in crypto that you're covering, and which are the ones that are the most difficult to cover for, let's say, an average crypto company?
Good question. So, it's, I guess to us, it's less about the ones that are most difficult and more about those coverages that are most in demand, right? So if you look at crypto companies, and this is really one of the beautiful parts I think about underwriting in this space is that if you're a legitimate player in the crypto space, or you're seeking to become a legitimate player in the crypto space, you're going to be looking to raise capital from third parties, right? And if you need to raise capital from third-party investors, you're likely going to have to bring independent members into your board of directors, right? And if you want a credible member to sit on your board, they're going to require you to have directors and officers liability insurance, right? If you're going to take your crypto exchange or your crypto custody platform and seek, voluntary regulation in a jurisdiction that is going to put you under a magnifying glass so that you can get an authorization, that regulator is going to require that you have a minimum amount of professional indemnity insurance. If you're seeking to provide some type of services that's going to involve traditional finance, you're going to have trading partners that are going to require you have minimum limits of cyber liability or technology professional liability. If you're a custodian seeking to onboard third-party assets, especially from institutional clients, you're not going to be able to onboard $1 worth of crypto these days without having some sort of enterprise-level crypto theft insurance. And so, from our perspective, what we've seen is, sometimes I don't like to make too much noise about this, but the insurance underwriting process for companies operating in the crypto space is almost self-selecting. You're not going to put yourself through an underwriting initiative if your company isn't operating above board in most cases. You're not going to subject yourself to regulation if your company is operating anywhere other than above board. And so those are the risks that we see. And that was really our starting point, was trying to provide capacity to these legitimate operators for these coverages that they absolutely needed to obtain in order to scale their business, in order to raise that next round, in order to get that authorization, in order to be able to execute on a contract with a trading partner. And so that's where we started. It's less about what are the most difficult risks, and it's more about what are the most important risks to these companies that we can provide coverage for.
This podcast is brought to you by Bullish. Bullish is a powerful new exchange for digital assets that offers deep liquidity, automated market making, and state-of-the-art security. Follow Bullish on Twitter or visit bullish.com to learn more. Please note that digital assets and cryptocurrencies are high-risk products. Consult your professional advisor before dealing in them. Bullish's services are available in select locations only and not to U.S. persons. Visit bullish.com for important information and risk warnings. What about some of the other inherent risks of crypto? For example, elements like, let's say a smart contract risk, a staking related risk, or, a private key theft risk. How do you guys address some of these? First of all, are these the risks that you guys are able to cover? And how do you look at these risks when they come up?
Yeah, yes, they are. Right. And I think this is some of the most interesting stuff that's going on in the crypto insurance space right now. So we worked with, in two different instances, two of the largest proof of stake infrastructure providers in the space to come up with a slashing insurance product, right? You have staking as a service providers onboarding third-party assets. And in many cases, these assets are coming from institutional investors. And these investors want to know that in the event of slashing penalties, and those slashing penalties could kind of manifest themselves typically in one of two forms, either extended network downtime, where the validator node or the server supporting that node are offline for an extended period of time, or a double signing event, which has pretty catastrophic financial consequences. These investors want to know that the capital they're putting with this professional staking firm is protected. And in the event of a slashing occurrence, there's a source of financial recovery to make them whole, or at least partly in whole, much the same they were prior to the loss taking place. So slashing insurance is a product that we developed last year and have scaled in its offerings since then. Smart contract failure is another amazingly important source of protection in the scaling DeFi economy. I mean, if you think about, total value locked is kind of the benchmark, right? There's nearly $200 billion worth of value locked in smart contracts currently. And since DeFi became a thing in late 2019, early 2020, there's been $2 billion worth of funds in DeFi that have just evaporated, right? And this happens largely as a result of deficiencies in the underlying code that is empowering these smart contracts to facilitate transactions in a completely disintermediated fashion. And if you think about that idea, right, finance is intermediated. Finance, in the traditional sense, is friction. There's friction there. There are intermediaries at every step of the transaction. There are fees that are being deducted from whatever that transaction is that you're trying to engage in. And when smart contracts and decentralized finance, which is the idea of removing the intermediaries and relying on technology to execute transactions in a nearly frictionless manner, that's a beautiful thing. And when it works, it is. But when it doesn't work, the consequences, as we've seen, they're catastrophic. I mean, hundreds of millions of dollars can get lost in a minute. And the idea of providing regulated smart contract failure insurance is a critically important aspect of providing and developing resilience within the DeFi sector of the crypto economy.
It's very impressive that you guys are obviously insuring not only DeFi, but also slashing. Maybe for the benefit of our audience, slashing is a kind of, in proof of stake protocols, like, I think Polkadot has it, at 2.0 is going to have it as well. It's kind of a penalty when you're staking. And this is why there's insurance coverage that Joe was mentioning on it. I just want to touch upon one thing you just mentioned on DeFi protocols, right? What do you think is the future of these DeFi native insurers? We've seen firms like Nexus and others where they literally, via smart contract in a decentralized way, insure smart contract risk. What do you think is the future of such protocols, and how does that, let's say, cohabitate with traditional insurance firms that could look at the insuring DeFi ecosystems?
So I think they're fascinating, right? I think academically, the idea of on-chain, crypto-denominated, smart contract facilitated, decentralized insurance is really cool. And I believe it plays a role, and it has played a role in making participants in DeFi whole again. But there are challenges with the on-chain decentralized insurance model. The fact that it isn't regulated, the fact that there isn't contract certainty in the traditional sense, the fact that claims could be covered but may not actually be reimbursed creates certain challenges within a certain sector of insurance buyers, right? Institutional buyers of insurance or commercial buyers of insurance typically are going to need a more traditional regulatory source of dependability regarding the likelihood that the coverage they're paying for is going to provide them the protection they're anticipating in the event that those covered unfortunate circumstances arise. And while there have been payouts certainly in the decentralized insurance space, the lack of a regulatory reference point, I think, is one of the biggest challenges.
And you raise an interesting point, because actually I talk about this in my latest book, the Book of Crypto, that I just introduced at the beginning of the show, because if these platforms are able to insure smart contract risk. If there's like a bug in it, there's a problem in the code. But often what we've been seeing is the risks that are happening are not linked to the smart contract. A very good example is one of the hack that happened the Ronin Bridge a couple weeks ago, where it was really kind of a governance problem, right? It was the way it was actually done was actually the policies, the procedures were not respected. So it was not really a problem in the smart contract. It actually operated as it should. It was actually some of the policies people had around. So I think it's very interesting on that perspective what could happen. It's very interesting what you mentioned on that side. For example, even events like Luna that just happened, the crash of USD. Not only Luna, but I'd say the TerraUSD ecosystem as well. I mean, from an insurance perspective, is there something that could have even been done there? I mean, could have people bought insurance against this risk, or it's really not something that is even available?
Yeah, the risk with UST is really, it's a DPEG exposure, right? Which creates this kind of counterparty risk. And I think the closest version of insurance protection that you could potentially point to that could have prevented or provided some element of protection in the event of this DPEG scenario, something akin to a credit default swap. But it's not a function of bad code. It's not smart contract failure. It's not a slashing occurrence. It's a function of an algorithm that was tied to a stabilizing mechanism that didn't hold under really adverse consequences. And that's a very, very difficult concept, I think, for insurance companies to wrap their arms around. And I think there was one decentralized platform that actually was making payouts for some form of DPEG coverage following the UST DPEG event. But yeah, it's an unbelievably unfortunate set of consequences, but it is an amazingly enlightening sequence of events to watch play out in the context of insurance product development initiatives.
Yeah, it's very interesting as well, because in theory, you could argue in the white paper, the Luna 2019 white paper, this scenario, was there. If the value of Luna collapses, then literally, the peg of USD may collapse. But of course, there was no risk disclosures, right? There's no way this was actually disclosed in any way or form to potential investors or holders of UST. So very interesting. Joe, what I found fascinating is what you mentioned at the beginning, where you mentioned, in addition to crypto, you guys are actually also insure marijuana or weed companies, as well as psychedelic type of companies. Which one, out of curiosity, which one are more riskier? Is it marijuana companies, psychedelics, or crypto? And overall, I know both are on the fringes, right? And these are industries that are just emerging. But from a risk perspective, is there one industry that has a higher risk than the other one? Or is it still account-based when you look at these companies?
Yeah, these industries have different risks. What I love about operating in the crypto and blockchain space is it is truly global, right? And in some cases, in a lot of cases, it is borderless. And you have these amazing innovators that are pushing so far into this space and evolving and scaling these businesses so rapidly that it is a constant exercise in trying to find opportunities where insurance can support these initiatives and this technology. In cannabis, the majority of the demand for our capacity in the cannabis space has really come from the directors and officers liability side of things. Certainly there are cannabis companies out there that are buying property insurance and they're buying general liability insurance and product liability insurance. But we provide capacity where there's a dislocation, and as it just so happens in the cannabis space, a lot of that has to do with directors and officers liability insurance. But there have been amazing corrections in the cannabis space. If you look at what happened in 2019, market values on Canadian stock exchanges fell 90%. We came into the cannabis underwriting space, very deliberately after we saw a significant correction in the market. And what we've been able to do since then is we've underwritten companies operating in more than 8 countries, listed on national exchanges, or companies that are getting ready to raise rounds or go public via IPO or RTO or DSPAC. And we get to watch these spaces play out. We get to watch the M&A and the aggregation that's taking place. And then on the psychedelic side of things, it's very early days. We're 5 years in psychedelics, at least behind where the cannabis space is. So we get to see companies that are pursuing DMT, MDMA, ayahuasca, psilocybin, ketamine-based therapeutics that could literally change the way we treat things like depression, eating disorder, anxiety, right? It's an amazing perspective that we get to have in that space, but it's very early days. We're talking early stage clinical trials. So the risk for us in the psychedelic space is more of an investor risk. There's really no bodily injury exposure at this point right now. But I think where we're at in the timeline on psychedelics is we get to watch and kind of pick and choose our space as these companies kind of present themselves as leaders in the industry.
This episode is brought to you by CoinFlex.us, the first and only crypto exchange where you can trade with zero fees and earn interest with the world's first interest-earning stablecoin called FlexUSD. Flex USD pays interest on chain every 8 hours directly into the user's wallet. No staking required. Follow CoinFlex_US on Twitter and sign up on coinflex.us to learn more today. I have two last questions, Joe, before I let you go. One of them is obviously what you do at Relm is very innovative. The industries you cover obviously very, very innovative. But the way you guys operate, and please correct me if I'm wrong, is obviously you're still using brokers. It's still paper-based. You know, people are still signing insurance contracts. I mean, when do you think that will change? Do you think the way insurance is being sold, both to retail but also corporates in particular, is going to change anytime soon, or you think it's that we're still way off from that? They're having material change on that perspective.
It's a really good question, and I think what the general insurance marketplace, of buyers needs right now is they need fiat denominated, off chain, regulated form of insurance, right? And that's a space that we are absolutely happy to be involved in, and leading coverage initiatives for companies who need coverage in the traditional sense. But without question, I think one of the most interesting opportunities, and what I consider to be a real possibility, is for a new way of insurance transaction to be facilitated. There's absolute merit in pursuing this technology to add an element of decentralization, to add an element of transparency by transacting insurance on chain, to add an element of efficiency by utilizing a currency that isn't subject to traditional banking rails and wire transfer, and the slowness of movement of funds from insurance buyer to insurance capacity provider and reinsurance capacity provider. So I absolutely see an opportunity for the way that traditional insurance is transacted to be altered. And I think that's happening right now.
Wow, interesting. I mean, in what way? What are the big changes you're seeing in the way that transition is happening then?
You look at what's going on with some of these decentralized insurance marketplaces. They may not be regulated, right? And they may not provide the contract certainty that most institutional buyers are looking for, but they're actually providing and demonstrating a demand in the market for people who want that kind of insurance. And I think the more that proliferates and the more use cases we come across, especially, as we on the technology side of our business start connecting primary insurance with regulated reinsurance via smart contract, we're going to find more and more use cases that are going to validate that type of insurance transaction.
You hit the nail on the head of the last question I want to ask you is about reinsurance. I think maybe it'd be good for our audience, obviously, to understand that obviously there's insurance that people deal with, but very importantly, behind the scenes, there's reinsurers. How do you deal? I know this was always a challenge in the crypto space. How are you guys dealing with the issue of reinsurance when it comes to the risk that you're covering?
It's a great question. And it's a topic, we literally deal with every single week. It is very non-standard for an insurance company to operate, going on 3 years as we have without any reinsurance support. But that's actually exactly what we've done. The same challenges that the operators within the crypto and blockchain ecosystem have finding primary insurance, we have finding reinsurance for all of the same reasons. And so as a result, really the only way that we can kind of ensure our resiliency as a direct writer of insurance without reinsurance is to manage the aggregate limits of liability that we offer any one policyholder. Manage the retentions or the deductibles that exist on any of these policies to try to insulate us as much as possible from any sort of catastrophic loss. But it's not a sustainable way to run an insurance company, right? We have to find a risk transfer solution. And if we can't find it in the traditional reinsurance marketplace, which, to date, we've had very little success. And I think every day we're kind of getting incrementally closer to getting companies who are comfortable with our operations, right? We've got 2 years worth of audited financials from Deloitte. We've got a scaling book. We've got good loss experience. But even then, it's difficult to move the needle. And so what we've done over the last 6 months is really an extension of the strategy that we leveraged to bring Relm to market. Is we actually worked with the Bermuda Monetary Authority to create the first multi-currency collateralized reinsurance facility, right? So this is a piece of regulated reinsurance infrastructure, an incorporated entity that exists in Bermuda, structured as a segregated accounts company that actually can now utilize third-party investor capital, either in the traditional sense or from the crypto capital provider space and inject that capital into a regulated reinsurance facility to give us a risk transfer solution, right? So if you think about the idea of taking aligned capital, let's say denominated in USDC or USDT or Gemini US dollar, we can now put that collateral into a regulated reinsurance facility and use that as support for us to go to market with larger limits or to expedite the delivery of insurance product development initiatives. And so, our whole proposition is if we can't find it in the traditional marketplace, that doesn't mean that's where the search effort ends. There are always these strategies that we're pursuing. And to the extent that we can find aligned third-party investor capital, I think there's some pretty amazing things that we can accomplish.
You're just making me think. I mean, don't you think there's an argument there that, I grew up in Montreal, Canada, where there's a lot of these co-op concepts, right? Where kind of the crypto industry needs to come together with this cooperative approach, exactly like a model you mentioned, where everybody injects capital in and we kind of self-insure the risk, a bit like captive insurance, but for the industry. I mean, I don't know if this is a crazy idea, but I mean, it kind of goes to what you're saying on that perspective, right? In your case, you're using investors' money.
Yeah, you're 100% correct there, right? And a lot of those investors are people operating within the crypto space, right? They can use Relm 2's infrastructure and authorization to pool together funds effectively to build resiliency across the crypto economy in a way that, for better or worse, the traditional reinsurance marketplace just doesn't have the appetite for right now. So I think it presents a huge opportunity.
Super interesting. I mean, we can have a whole discussion on that topic. I think this is really the early days of crypto insurance. I have to say, Joe, I mean, obviously, just being in the crypto industry now for many, many years, I've seen the difficulties crypto companies have had with insurance. I mean, I've had personally so many conversations with insurance companies. And I mean, it's some of the elements we discussed today, the fact that, they're very profitable companies doing what they're doing. People often been there. I know that often I was speaking to somebody recently, insurance company, where he's been there for now 19 years. And he's not even in a top 50% when it comes to longevity at the company. I mean, it's absolutely incredible. When companies where there's no turnover in the management, in staff, doesn't really bring this kind of outside mindset, right? And I think what you guys have been doing for the benefit of the crypto industry has been actually quite fascinating. So really well done there, Joe. I think you guys have played a very interesting, what you guys are doing. I think the industry is going to evolve quite a bit. Joe, as we finish off the show, my Bell is here with me. And we're going to go quick questions, round of 5 round questions. So Joe, I need 1 or 2 word quick answers to these questions that I'm asking you. Hope you're ready?
Ready.
Let's do it. Joe, what's your favorite thing to do on a weekend when you're not working on insurance?
Go to the beach with my family.
Well, you mentioned before at the start, you're a big surfer. Where's your favorite place to surf? Is one place you recommend people should go surf?
Hanalei Bay.
Whoa. Where's that?
It's on the North Shore of Kauai.
Oh, here we go. You mentioned also you're a big cook. You love to cook. What's the favorite meal? What's your specialty, your a la Joe specialty favorite meal to cook?
I'm more about the culture of cuisine, and I love Indian food. So anything Indian, sign me up. I'll cook it.
Well, here we go. Obviously, you spend a lot of time in Bermuda. What's your favorite thing to do in Bermuda?
Get to the beach. Get on the water. It's a beautiful island.
We're seeing a pattern there. One restaurant, your favorite restaurant, you're a big foodie. What's your favorite restaurant anywhere in the world? One restaurant you recommend people to go?
Oh my God, that is difficult. Silly Key, Anguilla, little island off the harbor, and they serve amazing curried crayfish, pulling it straight out of the water. You can eat in a bathing suit and flip-flops. It's a beautiful thing.
I love it. Here you go. This is free marketing for this beach hut in Anguilla if they're listening. On the crypto side, Joe, what keeps you up at night?
Systemic risks, sweeping regulatory reform. That could have a massive impact on our entire book.
There you go. And what on the other flip side, what's exciting you the most about the crypto industry?
I mean, the opportunities are, they're tangible and they're seemingly endless at this point.
From all the insurance companies out there, what is the one that you admire or you think is pretty cutting edge? A part of Relm, a part of your company. What is the one from the large insurance companies you think actually is doing some pretty cool stuff?
I would say the Lloyd's marketplace as a whole, right? I mean, there are some very interesting initiatives coming out of Lloyd's in support of not just companies operating in the crypto space, but also some of these other emerging sectors.
Wow, interesting. I would have not expected that. Lloyd's has been, I don't know how many hundreds year old, right? Interesting. Who's one person you admire the most in the insurance industry?
Craig Swan, the CEO of the Bermuda Monetary Authority, for having enough innovation to move around their authorizations, for sure.
To the BMA who's listening, here you go. A good accolades from there. And last question again, Joe, thanks you for being with us today. If you could have lunch or dinner with one person, who would that be? Lunch or dinner with one person, who would that be?
Henri Arslanian. You, Henry.
Man, I would love to take you out for dinner anytime you want.
Let's go.
This was Joe Ziolkowski, the CEO, co-founder of Relm Insurance. Joe, where can people find you if they want to learn more about you or what the work you're doing in the space?
Yeah, find me on LinkedIn, or if you happen to be in Bermuda, you can stop by our office.
Excellent, Joe. Thank you very much. And thank you very much for everybody listening here to us today. Again, if you like the show, make sure to subscribe and give us a 5-star rating. It really helps us more people discover the show. Again, if you want to stay on top of the latest developments on the future of crypto or future of money, make sure to follow me on LinkedIn and Twitter. Post daily content now on all my different channels. And again, thank you very much for all the support for my latest book, The Book of Crypto, that is available on Amazon and also with my publisher, Pelgrave. Thank you guys for making it the #1 new release. And really, if you're interested in learning more about crypto, make sure to check it out. It's a great book, especially for those heading for the summer break soon. Great book to read if you want to use that time to really upscale and learn more about crypto. Thank you very much, everybody. Thank you for joining us today on this episode of the Future Money Podcast, and see you all next time.